Welcome to the BNB. Today's discussion is an important one in my opinion. I'm here to discuss another trading opportunity, and that stock is a Wall Street bet stock. It is Wish, ticker symbol WISH. The company's name is ContextLogic. I don't understand the correlation between that, but it is what it is. I'm not going to look into that too much. So first of all, we're going to look into the fundamental standpoints of the company. Is it a good company to invest for a long period of time? So we're going to look into the financials, revenue, insider trading, and many other financial metrics. And then we'll go ape mode and see if it's a good trading opportunity and can we actually cause a short squeeze. What's the short ratio? Is it a good thing to invest in as a Wall Street bet stock? Because honestly, the goal of Wall Street is to punish naked short sellers. And if naked short sellers are getting punished, then Wall Street bet apes are happy. That's what they did with AMC. And now we're going to let's get started with the fundamentals. Market cap is $8.36 billion when I last researched the company. The revenues were $2.87 billion. In my opinion, that is not bad. Like if you go price to sales of the company, it's around 3, and when you look into it's 2.90 actually. So I was looking into my screen where it was. It's 2.90, the price to sales ratio. It's not even PE, it's price to sales. It's 2.90. It's honestly not bad. When you look at AMC's price to sales ratio, it's 62. So honestly, if you try to value it on an ape standpoint, it's undervalued and very, very undervalued if you go ape mode. But if you go Warren Buffett mode, long-term mode, somebody that's fundamental investor, then you have to look into other metrics because price to sales seems good. But what is their actual earning? Is the company profitable? And what we see, they are not profitable at all. $807 million lost last year. Their growth must be insane. But like their growth, in my opinion, is actually insane. But the issue is their sustainability and the fact that the company is spending a lot of money for some reasons. I didn't look into the actual reason on what they were spending the money on. If I was going to invest into the company, I'm obviously going to look into that. Why is the company losing so much money? Because that's a really important way to find out, is the management good or not. But we were able to find out that the company has a lot of cash in hand. Now, I don't know if it's because they did some share offerings or it's just because the company already had a lot of cash in hand. I probably would assume that they did a lot of share offering. But if they did some share offering, you wouldn't see that on the balance sheet right now. You'd see them on the next quarter. That's next quarter's earning balance sheet. But for now, we know that they have a lot of cash in hand. And this is really good. So, like I can see these metrics were the financials I was going to look into. And obviously looking at the financials right now, it's not so bad. I just have to look into why or if you want to invest in the company on a long-term basis, you should look into why they're losing so much money. What's the management doing? And how does it have so much cash in hand? Now, these were all the financial metrics. I would like to go into the business model of the company. And honestly, I would personally, I really, really love the business model because it's a combination of Amazon and Dollar Tree together combined, and the scaling can be on Amazon's level and the prices are on Dollar Tree's level. If you're Canadian, if you don't know what Dollar Tree is, it's Dollarama and Amazon. So you combine those two, and that's what the business model is. So they operate online, so the way they can expand the business, it's really easy through Facebook ads and the way they market and everything. It's really easy for Wish to improve, and we've seen a lot of marketing for the beforehand. I was seeing a lot of marketing. The marketing has died down a little bit, so maybe that's where they were spending most of their money. That's why they have $807 million of losses in their balance sheet. But I've been I looked into Dollarama a lot, and I was able to find out that these companies, even though they sell their products on a very low prices, they have high margins because they get those products on a way lower price than you can even imagine. Like some products, they get them for half a cent and they sell them for $1. So that's a 99% margin, profit margin. That's incredible. That's on certain product, obviously not on all of them, because then, oh wow, this is crazy. And also they can put in the shipping cost towards the customer has to pay the shipping cost. In the Dollar Tree's case, they do the shipping themselves. They pay for the containers to come in and then they merchandise it and everything. So there's a bit of difference, and that's why I'm saying it's a good business model. So I'm really pumped up about that, and I believe if they execute on their business model really well, they can thrive. Now, if you go on insider trading, I'm really, really disappointed in the management and in the fact that the Wall Street bets weren't able to recognize that. All the companies, high position, like management, corporates, and everything, they liquidated these stocks. And when you think about it, that's not good at all. You're liquidating stocks when you have a community that's trying to help you guys out and squeeze the stocks, squeeze the shorts and whatever, get all the negativity out of the stocks, and they're trying to help you out, and you guys decide to like profit off them. I can, like, on the screen you can see like the insider trading from the high end. It's really disappointing. So they're not supporting the ape movement, and like I'm not somebody that personally supports the ape movement in any way, shape, or form, but like unfortunately the camera went off, so I was ranting about the corporate selling their stocks and being disregarding the Wall Street movement, rather than EMC CEO embracing the movement. They were disregarding it, and in my opinion, that was a really bad way to represent the corporate team and the management. Honestly, like I don't it's not about the respect anymore. It's just that I cannot consider them as a management that really wants the company to succeed. They just want to gain for themselves. They want to profit for themselves. Now they might buy back shares later on, and honestly, if the ape movement stays strong, like we can force the management to buy the stocks for even higher price. But let's be serious. It's not going to happen. Maybe the stock will go down eventually. The management and the corporates are ready to wait years upon years, while the Wall Street movement, I don't know if they can be this resilient and stay in the stock for that long and say we like the stock for a couple of years and even more. But honestly, I want Matthias Woolley to come in now, and he's going to be explaining the good side, the ape side, actually the Wall Street bet side of the investment, if it is a good way to come in, and if it is a good stock, a good short squeeze stock. Sorry. And in my opinion, it might be. He will explain what's the short ratio and everything. So coming in, thank you very much.
Now let's do an ape analysis on the Wish stock. So I personally think that the Wish stock will do 100x in the first 5 seconds of market open. Now that I've said the most retarded claim, let me look in what Wall Street Bets has to say about it. While I talk about the analysis, I'll be showcasing what Wall Street bettors have put in their portfolio regarding Wish. So for my research on why the degenerates believe the Wish stock will go up, the short ratio is 15.75%, while the traded shares are only 67%, which enables a huge potential for a short squeeze and to punish the naked short sellers that are just ruining the financial markets. Now, they also discuss the analytics of why Wish will go up, but personally I'm a rookie in that, so I won't be talking to you guys about the technical analysis like the Bollinger Bands or RSI and stuff like that. Thank you for watching.